Hey guys, welcome back to another video, and today I'm here to talk about what is going on in the stock market and what I think is going to happen next. So if you do enjoy this video, be sure to smash the like button. Also subscribe to the channel. I'd appreciate it a lot. You guys are being so supportive. We're at 470 subscribers, almost at 500. Thank you guys, and let's get there soon. So without further ado, let's get right into the video. So if we look at the portfolio today, we're actually up 1.33%. Past week, we are up $1,000. So very glad with what's going on in the portfolio right now. Definitely been a good 3 months, a good year, and then all time, the same. So very glad with what's going on in the portfolio. But let's take a look at the broad stock market. For this, looking at this, I usually use SPY, the ETF, because this is a pretty good, indicator of what's going on in the market as a whole. It's a broad index fund of some of the 500 biggest companies in the US. And, it's varied throughout a few different sectors, mostly technology, but there are, others are very close behind. But if we take a look at this one, we see they're actually at an all-time high. Today is an all-time high for SPY. And a lot of days have been. I mean, look at, how often it's rising. So we're hitting new all-time highs every single day. The market is very expensive right now. Every stock in the stock market is very inflated. It's very highly priced. So what I wanted to talk about today is the stock market going to crash? And here are five, this is an article right here, a few risk factors. Because the stock market is, ever changing every single day. There's a different price movement. There's different news that comes out. We learn that something happened across the country, something happened across the globe that affects the price of oil. There's so many moving parts in the stock market that it's impossible to predict when the stock market's going to drop. It's impossible. No one knew it was going to drop right here. No one knew it was going to rise. They were all just guesses. But what we can do is try our best to, get in or out before it does rise or drop. So we never know exactly when it is going to, but there are some indicators that have been popping up recently. And for example, we have the cascading events. The main risk factor is watching heading into the final months of 2025, or what everyone's discussing. Inflation, obviously, inflation is a very big, factor in the stock market. And it's definitely rising. I mean, inflation is some of the highest it's ever been. There is an assumption that there's going to be a rate cut pretty soon here. When there is that FOMC meeting, I think it's in September. So people are, thinking that there is going to be a rate cut, which would be great. But I mean, yeah, like look at right here. The sentiment quickly changed in 2020 when the pandemic began and during the 2008 financial crisis. Markets handle bad news and they struggle, or they can handle bad news and they struggle with uncertainty about bad news. And the combination of high valuations, stretched investor sentiment, and any unexpected economic surprise could create the perfect storm for a correction. This is very much true. You need to be on your toes about a correction right now because this kind of looked like it was going to be a correction, but, it bounced back from April, to July, pretty much no problem. It was pretty easy for the stock market. So it does kind of look like there's going to be a correction, pretty soon. So I would brace for that. I have been taking a little bit of profits on a few of my stocks, and moving them into different stocks. Another factor that's actually making the stock market look very inflated is the sky high valuations. So the US stock market has some of the highest ever valuations. I mean, we've seen that. If you guys watch my channel, you watch other stock channels, you see when they look at the PE ratio of some stocks that are good stocks, don't get me wrong, but there's some stocks with some high PE ratios. I mean, let's take a look at Celsius. It's a great stock. Celsius has been doing very good. It has a PE ratio of 164. No stock should have a PE ratio of 164 besides maybe Nvidia because of their price movement and what they do. I don't think, what's their PE ratio? Their PE ratio is 51, which is still really high, but it's definitely deserved for Nvidia. But look at what they do. It's insane. Nvidia stock is crazy. So definitely makes sense on that end. But if we also we see the price to earnings, price to sales, and price to book ratios are all sky high valuation. Currently, so this is interesting. The Invesco QQQ Trust ETF, so ticker symbol, so triple Qs, which primarily consists of the biggest and most popular U.S. stocks, is currently at roughly 3.5 times what it should be based upon the current and likely future earnings of those companies. So very inflated. That's why, I mean, that's why I make these videos about single stocks, because there are better opportunities in single stocks at times, I think. Like, for example, not to, single any stocks out, but I think that Nike right now is more undervalued than the broad market. I think that Nike is a stock that is still, worth a decent amount. It's still not really cheap per se. I'd say that it's decently cheap, but a stock like Nike has a pretty low PE ratio historically compared to what it has been. And it's a cheap stock right now. I think Google is a cheap stock right now, but that's about it in my portfolio. Like Google, look at their PE ratio, it's pretty low compared to their sector. But that is about it in my portfolio as far as cheap stocks go. I don't, there's a lot that are very high valuations. So I would watch out when investing in some of these stocks. Like, you don't want to put all your money into, for example, I don't know, AMD. Like, I think AMD is still a great investment right now, but I wouldn't put all my money into AMD while, it's almost at a 5-year high if I don't believe in the company's, financials, fundamentals, leadership, and their price. So their PE ratio is 96 right now. Maybe a little bit skewed, but I mean, Nvidia and AMD, these companies deserve high PE ratios. They're great companies. I mean, look at what they're expecting on earnings. That's a decent amount. But I do really like AMD, and I think that it's still a good investment. But yeah, these stocks are trading rich. There's not much more to say about that. And then also, debts, not tariffs. Tariffs have taken center stage since, T-Man took office, but other potential market headwinds are gaining more attention. The aim here, as we know, is to give a boost to domestic. I mean, there's a lot of talk. Basically, there's a lot of debt, in the government. So you see the U.S. debt to GDP ratio is nearing 120%, raising concerns about a bond market sell-off. So I don't really invest in bonds. I know that is a thing for a lot of people. It's a great way to diversify your portfolio, have that triple crown, or, whatever portfolio you're running. Bonds are definitely a great, thing to have in there. Not something that I'm into at this time and stage in my life, but I'm sure as I get older, I'll put money into bonds. And yeah, I mean, the debt for the U.S. is definitely very high. It's been very high for a long time, and GDP growth is also slowing in 2025 and 2026. It's not slowing down to zero, but it is lower than it has been historically at a compounding annual growth rate. So just something to take into consideration. Stubborn inflation. Inflation remains the most considerable risk for the U.S. economy because of the post-Rona surge in prices. It was never entirely squashed. So we see that, there's heavy debt in the market. And then we also see that the consumer price index clocked in 2.7% in July. And the Fed survey of consumer expectations projected that inflation will rise to 3.1% in the next year. That's very high as far as inflation goes. Usually it rises around 2% a year. So, add a 50% increase on that is pretty insane. Not what you want to see in the stock market, definitely. But, I mean, this is why, I'm making this video, is because you get opportunities in the stock market when inflation does, rise and stocks drop. Definitely a lot of buying opportunities. There's still scarce buying opportunities in the stock market right now. But, like in 2020, when everything dropped because of Rona, the pandemic, every stock was a buy. Every stock was cheap. Every stock was a good buy. You could have bought, pretty much any company in the stock market, and you're up around probably, 100, 200, 300% right now. There are a few outliers that, didn't rise as much, and then there's a few outliers that, rose 10 times their amount. So there definitely is, different, things in the stock market that could happen. The jobs data continues to be a key economic indicator. Jobs data has been bad past couple reports. That's definitely brought the stock market down for the short term. When the jobs reports have been released, there definitely has been some red days in the stock market and the indexes when the jobs report was released, and it bounced back after every time. But I don't think that that's going to happen every time. But it has been a little scary with the jobs report. I'm not going to lie. So those are 5 things that you need to take into consideration, I think, as far as investing and making money and where the direction the stock market's going in. I think those are good things to consider, and you definitely do want to either hold off on your money, put it in a high yield savings account, or maybe invest in the cheap stocks where the opportunities are, or maybe just dollar cost average in an index and be fine if it does drop. That's a strategy that I always recommend. So another thing I wanted to look at was the fear and greed index. We see that we're actually nearing extreme greed. We are in the greed territory right now, so the people are saying the stock market is, overvalued. Every stock is trading at a premium. People are getting greedy. Especially we see putting call options, extreme greed. So there's a lot of people buying, call options and saying the stocks are going to go up. So the fact that there's a lot of greed in the stock market, that's a thing that shows you that probably it's gonna, balance out pretty soon. So I don't have a definitive answer if I think that the stock market is going to drop, if I think it's going to rise, but I do have predictions, and I think that probably a correction will happen in the next few months. If I did have to guess, I'd say that probably is what's going to happen in the next few months. But at the same time, I think that you still have to invest the same. So I wouldn't, sell out of all my stocks. I just, if it does drop, have some money ready on the sideline, or hopefully you have a steady income coming in and you can, use some of that to invest into the stock market when it does drop, because that's ideal. If you can dollar cost average down into great companies that you already love. And I mean, especially a stock like Nike right here. If Nike drops even more, then I'm even more inclined to buy it, and I don't think it can, get below a certain price. So I do think that, stocks that are already kind of cheap are insanely good buys when the stock market drops, because it drops the price of the already cheap stock that I was going to buy anyways. So yeah, I mean, that's really always a great thing to do in the stock market. And then we see SoFi right here just on a tear. I mean, that's against the point, but I mean, that's crazy. I mean, even in this great market, SoFi is doing even better than how, the indexes are doing. But that's all I have for today's video, guys. I hope you did enjoy and, gain some knowledge and kind of some understanding on what my vision is in the stock market, where we are in the long term, and what's going to happen in the future. Because I don't know, you don't know, Warren Buffett doesn't know, nobody knows, but we can all make guesses and we can see who's right. And yeah, so if you did enjoy this video, be sure to subscribe to the channel. I'd really appreciate it. We're almost at 500 subscribers, huge milestone for me. And also smash the like button on the video. If you did enjoy it, I'd really appreciate it. It helps out the algorithm. It helps me out. So yeah, I'll catch you guys in the next video. Thank you for watching. Peace.